In this video, I'm going to be sharing with you how my 8-month-old will become a millionaire by the time he's 8 with just one property. Airbnb investing is one of the fastest ways to achieve financial freedom. You can literally become financially free with just one property. Like, seriously. So in this video, I'm going to share with you exactly how I analyze a property step by step. And make sure you watch to the end, as every step of analyzing a property is crucial. We're talking about hundreds of thousands of dollars, and you don't want to make an expensive mistake. And at the end of the video, I'll show you the numbers of my son's property. If you're new to the channel, my name is Preston and I'm an entrepreneur, investor, and we own real estate properties, 50+ rental units. And we also own 3 Airbnb properties. I became a millionaire by the time I was 28, and all the information on this channel is free. I literally quit my job to help you become financially free, so make sure you're subscribed. The first thing I always do when researching markets for Airbnb is I like to put my tourist hat on and look at Google Maps to see which markets I would like to travel to. Now, some of the destinations might not be obvious, but some good starting points is looking at towns that have lakes, beaches, mountains, and national parks. It can also be helpful to Google top places to invest in vacation rentals to get you a starting point. So AirDNA has an article that has the best place to invest in vacation rentals, so let's use this. Okay, so I don't like to look at US large markets. Let's go to US medium here. Carolina, New York, Kentucky, Connecticut. Okay, Pass Christian, Mississippi might be an interesting one. I know that's on the Gulf, so let's actually use this as our example for this video. Now, I wouldn't blindly just invest in these just because they're on the list, but it's a good exercise to research different areas. And it really doesn't matter where you live. I live in Utah and have properties in Arizona and Florida, so the location really doesn't matter. But if you want to invest in your backyard, that's totally fine as well. And I personally like to go to markets that give me the best return. And again, for me personally, I weed out the big cities like LA, Miami, and New York, because generally speaking, those areas are not only super expensive, but they also typically have higher restrictions when it comes to short-term rentals. And pro tip, before you dive into any market, make sure that they allow short-term rentals. It's as simple as Googling the city you want to invest in, short-term rental laws. And before we go any further, I want to make sure that Pass Christian actually allows short-term rentals, so let's Google that. So when I Googled it, it came up with this ordinance here, and let's take a look to see if this actually allows short-term rentals. Okay, so it looks like they do allow it, but there's a permit required, so that's good news. So yeah, let's continue to use this example here. And if you can't find any short-term rental laws by Googling it, it's always good to double check with the city by calling them if you're concerned at all. All right, so once you have a market narrowed down, it's time to see the inventory of what's currently available. Okay, so we're over at realtor.com, and this is my favorite site to look for houses. And you can use any site like Zillow, Redfin, etc. I just personally like realtor.com. So as we go in here, let's type in Pass Christian, Mississippi. And then I always like to filter it down a little bit. So let's actually do 2+ bedrooms. And we want to hide any of the ones that are under contract. I personally filter out by HOA. I know there are people killing it within HOAs, but the risk you're taking is that they can shut down your entire operation overnight. I've literally seen horror stories of neighborhoods getting too saturated with Airbnbs, and the committees will vote to get them out. I'd rather not deal with the headache of if and when it'll happen, so I just avoid them altogether. So let's do no HOAs. So yeah, we have 23 homes that are in this range here. So let's just take a look. And this is important to mention. And as you go through these properties, there's usually 2 ways you can go about this. The first way is going turnkey, where there's minimal work to be done. But things you need to remember is that there will be way more competition if you go this route, and your equity upside is limited. And the second way is you can look for a property that needs some work, which is what we've done on most of our properties. There's less competition, but you typically have to put more money up front and deal with contractors. It's entirely dependent on how you want to go about this, but for this example, let's just take a look to see what's out there. Let's go down here, and I like to look for larger properties, so anything that's 3.2 or 4.2. Let's take a look at this one. Just kind of take a look to see. Okay, this is actually a really cool property. It's got the pool. It's pretty nice. $650,000 is not a bad price. So let's actually use this as an example. So my investing style, especially at this point, is I tend to go for larger properties. The reason behind this is it takes the same amount of effort to set up a smaller Airbnb as it does a bigger property. Plus, generally speaking, bigger properties have potential for higher revenue. I like to use AirDNA to hone in on what I can expect to earn on a specific property. I'm not sponsored or affiliated with them. They just have lots of great data you can pull from. It is a paid subscription, but it's about $100 a month for larger cities and $40 per month for smaller cities. What I typically do is use it while I'm making offers on properties and then cancel it when I'm not doing any more research. And again, you're talking about a big investment here, so spending a few $100 to not make an expensive mistake is well worth the price. All right, so let's plug in the address here. So this was a 1, 2, 3, 4 bedroom, and there's a 3 bathroom. And so this could easily sleep up to 12 guests. So let's update that and see what it comes out with. So we're looking at $643,000 as your annual revenue and $329 for your average daily rate. And we're looking at a potentially 54% occupancy. So what I found is AirDNA is usually typically conservative with their numbers, so we can actually validate this with Airbnb here in a second. So this rentalizer is completely free. So if you actually want to go through overviews, the occupancy rates, these are all paid services that you can buy. It's actually really well worth the price. I just don't have it unlocked here because I haven't paid for it. But the pricing tool is free, so that's always a good place to start. But if you want to drill in deeper, definitely make sure that you get the subscription. All right, so we're here on Airbnb.com, and let's go to Pasch Christian, Mississippi, and just put on flexible. I like to put it out a few weeks here. And then for guests, let's just put 6 here for now. So obviously we have a huge range here, so we want to drill in to be a little bit more specific. So our example before was a 4-bed, 3-bathroom configuration. So let's actually look in here, entire place, and we can actually filter by the amount of bedrooms. So 4-bed, 3-bath. And this will give us a good comp for our property. And what you notice is that lots of people don't have dynamic pricing on, which is something that we can go into in a different video. And this is a huge advantage that you can have as an Airbnb host, is by even having the dynamic pricing, it'll go a long way to increase your revenue. So let's take a look to see what the competition looks like. As we scroll down here, okay, so this cozy waterfront home in the Pass might be a potential good one here to use. Okay, so, I mean, the listing looks really clean, but they didn't use professional photography, which is a huge downside. Let's take a look. Okay, yeah, I mean, this one looks like a good enough comp here for our purposes for this video. Let's actually take a look to see if their prices change. It doesn't look like they change, but let's see if we increase the guests, see if that changes anything. Let's just use this as a comp, $300 a night. AirDNA said it was gonna be about 54% occupancy at $329. So let's use this as an example and plug it into the spreadsheet. So this is a spreadsheet that I use to analyze all my properties. So let's plug in the purchase price, $650,000 here. And pro tip, you can use a 10% down vacation home if you're there at least 14 days throughout the year. So interest rates are a little bit higher now, so let's be conservative and call that, not 500, let's call that 5%. And then, okay, as you come down here, the cost per bedroom, so this actually pulls into here. And so we have a 4-bedroom, 3-bath, so that's good. And then common spaces, I'm looking at the property here right now. I think there's only a couple, so let's just put 2 there for now. So yeah, so it's gonna be roughly about 30,000. That sounds about right for this big of a house. It's about 2,500 square feet. And then repairs, I mean, there really wasn't that many repairs, so let's just leave it at 12,000. So your initial investment's gonna be $130,000. So we come over here, and AirDNA, when we went back, it was about $329 as the average daily rate. So let's just leave it at 300 to be conservative, and average occupancy, they were calling it 55%. So all these expenses, you wanna make sure that you hone in, but to get a good starting point, you know, I would be conservative with your numbers again. I always make sure to set aside repairs and maintenance, and we're gonna manage the property ourselves, so I left that one out. So as you come down here, this is really where you wanna look, is the cash on cash return here. And we're looking at 5%. And so to put that in perspective, I like to get anywhere from 12 to 15% on my long-term rentals. And now for short-term rentals, I like to get anywhere from 30% and higher. So as you can see, the 5% return is pretty awful. But again, not all these properties that you analyze are gonna be winners. So this looked like it was gonna be a good deal on paper, but as you drill into these numbers, as you can see that this return is not good enough for you to investigate further. And that's why it's super important to know your numbers, because you don't wanna make an expensive mistake. And if you want access to all our investment calculators, we're doing a limited time bundle deal. We personally use this in our business, and it includes the long-term rentals, this short-term rental spreadsheet, flipping, wholesaling, BRRRR, it includes it all. And it's the most comprehensive bundle that I've seen anywhere. So if you want to check it out, link is in the description. Now, as promised, let's dig into the numbers of my son's property. So here's some pictures of my son's property. And as you can see, we bought it pretty turnkey, which I was super happy about, and actually appraised $60,000 over what we got it for. We'll dig into the numbers here. We're doing some minor repairs to it, but let's actually go in and dig into the numbers now. All right, so here are the numbers for my son's property. So we bought it for $835,000 We put 15% down as a down payment at a 5% interest rate. Estimating the furniture budget, we overestimated here. It's actually a 3-bedroom, but we put 5 bedrooms. So our initial investment is just gonna be over $205,000. Being conservative, so these are really conservative numbers for the average daily rate and also the occupancy rate. And so as you can see here, after all expenses, and this goes for everything that I've listed here, we're looking at a 44% cash on cash return. And again, we typically look for anywhere above 30%. So 44% is a killer number. And so our net cash flow each month is just gonna be over $7,500 a month for my son. And if you go in this tab over here, these are the projected 10-year numbers. And so it's always good to take a look to see how your investment's gonna perform throughout the years. So after we're all done, honestly, this property's gonna price for more, but I just left it at a conservative $875,000. So I told you that my son's gonna be a millionaire by the time he's 8 years old. So let's take a look to see how. So looking at the cash flow alone, in 8 years, he's gonna have accumulated just under $600,000 in cash flow. And as we look here at the appreciation, and I left it here at a conservative 3% each year, but it's likely gonna be higher than that. And as you can see here, he's gonna have just under $500,000 in equity in just appreciation alone. And this doesn't account for any of the tax savings either. So on the cash flow and the appreciation alone, he'll have accumulated over $1 million by the time he's 8 years old. If we take a look to see what total return on investment is in year 8, we're looking at 83%. So that's a crazy high number, and this is just off one property. As you look here on the very right, you can take a look to see exactly what you're looking at after 10 years. I mean, you're looking at a total return on initial investment of 636%, which is just nuts. As you can see, Airbnb investing is one of the fastest ways to achieve financial freedom. You can literally retire off one property if you find the right one. The most important thing before you invest is to make sure you run the numbers correctly to get the most accurate representation of what you can expect. As you saw in the analysis of our first property, initially it looked like it could be a great investment. But as we dug into the numbers, you saw that it was actually a dud of a deal. And again, if you're serious about real estate investing, we are doing a bundle deal on all our analysis calculators. Link in the description to check it out. I quit my job to help you become financially free. And that's always been the goal for this channel, is to help you achieve financial freedom. So make sure you subscribe so you don't miss any of our new videos. And if this video is helpful, please give it a like. Thanks, and we'll see you next time.